About to do our live. Well, welcome back, everybody, to the Oil and Gas Rundown Live here at King Operating. I am Rachel Griffith, a Senior Vice President here, and today we want to welcome you back to the live. So joining me today, our founder and CEO, Jay Young, and our EVP of Geology, Mark Ayers, and Land and Business Development, Bill Phillips. Hi, gentlemen. How are you?
Doing great.
Awesome.
Perfect. Well, today we're going to talk about a couple different things. We're going to go over what's happening right now with crude prices, touch on some oil and gas info, and then get into the actual bones and meat of this industry. We're going to talk a little bit about geology and the land side of oil and gas. So, Jay, let's kick it off here and talk about, we are still at that $100 oil marker. What do you see? What's going on?
Yeah, I tell you, that's a good question, good thoughts, and I tell you what's going to happen. And I think it's going to be an absolute. We're going to see such high prices going into 2027 this year, and the reason why this year and next year is because of supply and demand. I mean, there's been. I was reading this article in Wall Street Journal, and it talks about. It's the oil crisis will become a full-blown catastrophe within a month. And why will it become a catastrophe? And it talks about the buildup of inventories. You know, before COVID, we had about 10 billion barrels of oil in inventory around the world. 10 billion barrels in inventory. That's not being used. That is just on the sidelines. Today, there's not anybody that'll give us the exact count, but Morgan Stanley, J.P. Morgan, some of the bigger banks have thought we have less than 10 million. So we've gone from this enormous amount of inventory to little bit of oil. We're going to run out of oil really soon, and unless we pick up a lot of rigs, unless the strait is opened up soon, unless something happens, we're going to see a catastrophe in oil prices for a long period of time because we just don't simply have the oil, and demand's coming down a little bit around the world, and that's because it can, because people can't afford it, and if they can't afford it, they're not going to do it. It's like, and it just, I know we have a lot of inflation going on now, and of course April was one of the biggest inflation months ever, at over 3%, but we're seeing prices in gasoline going up, and Americans are spending $100 million more dollars, this week than they did last week for gasoline. And when you take that kind of money out of the system, it's going to hurt. And if you're not producing the oil, that's another. I mean, I don't know if a recession is the right word for what we're going to see in the future, but it's gonna. But unless you're invested in oil and gas, I mean, that's somebody laughed me out of an interview the other day. They were like, I forget who it was and where they were, but one of the guys, I said, hey, the only thing that you can do is invest in oil and gas, and that's the only thing. That's the only answer I have, because we talk about the serenity prayer, and God grant me the serenity to accept things I cannot change. You can't change what's going to happen. You cannot change what's going to happen with around the world and what's going to happen with oil prices and with the supplies, because they've been shut in on the Persian Gulf for a long time, and where Trump is today over in China, they're not getting as much oil as they as they have in the past. And if they're not going to get it, they're not going to have it. And wells are being shut in all over the Persian Gulf. And those wells, if everything was done today, it'll take months, if even years, to get back to our old production of 100 million barrels a day, because wells don't come on automatically as they're shut in. You don't just turn them back on like a faucet and they come back on at 100% of the rates. But also too, people aren't drilling for oil and gas anymore, and it's going to be ugly, which is ugly for them, good for us, because we're going to see, it's going to be a good run for oil and gas for the next 3 to 5 years, because we're going to see projects that are very economic. If we can get the rigs to drill. I mean, when oil prices go crazy like this, there's going to be no rigs in the yard. They're all going to be working. You can't get frac crews. That's why we're trying to build up to 2 rigs in the Mid-Con section and have 1 frac crew we have 2 rigs that work for King Operating long term, and we have 1 frac crew that works for King Operating 100% of the time. So we don't have that, trying to like right now we've got 7 different companies we're trying to bid to get a completion rig, and completion rigs are hard to get. So that's why our goal is to get one and pick it up and not let it go. Yeah, exactly.
We're going to hold on to her. Once we get her, we're going to hold on to her.
That's right. Absolutely.
Absolutely. Yeah, no, Jay, very interesting. It's kind of crazy how at first, you see this $100 oil price, people were shocked by it, thinking it would end, thinking there would be a resolution. I don't really think anybody thought this was going to start playing out over months and months and months. And now we're still at the same place. I think some people have almost forgotten. I don't want to say forgotten, but it's very quickly how immune people do become to the price of oil changing as it doesn't dip back down. So it's really interesting, the outlook for the next 6 months, a year. I think you're exactly right. I think we're going to see continued price elevation into 2027. And I will make a note that we are having a webinar tomorrow, really talking about this with Dan Steffens from EPG, John Malden, and they're going to really break down what is going on. What does this look like, the pricing trends? How long does this last? They're going to really dive into actually what is happening in the Middle East, the domino effect that we're looking at, and of course, how investors can take part in, profiting during this time of a little bit of crisis, a little bit of chaos out there, but there is opportunity for investors.
Yeah.
So we will be having that tomorrow at 11. Now let's talk a little bit, Jay, about natural gas. What is going on with natural gas? Are we going to start to see some substantial increase in pricing? Where is demand going for nat gas?
Yeah. Very interesting about natural gas, and I do love the longer the war goes on, the higher the bottom is, or the price that oil can go down to in the future. It's like, when the war started, people said, yeah, well, it's going to be over in a month or 2 weeks, and then we're just going to go in and start thinking about the bottom of oil price. So when everything goes back, it's going to be like the oil price maybe 60. Then it was 65, 70, 75, 80. Now I don't know where the bottom's going to be. I don't know where the bottom for oil is going to be, which it's incredible. It helps us out a lot when we're drilling for oil and gas, because the higher the price, the better the returns, better for the investors. So that's why I say we're on a very good run right now, and especially for natural gas, because oil prices are what they call backwardation. Is you have higher oil prices right now, but then a year from now they're lower. The futures price is lower on the scale, because they feel like that we're going to go down and we're going to see $80, $85 a barrel in a year. Well, with natural gas, it's not. There's no backwardation. It's forward, meaning that the price of natural gas is like $3 right now, and they feel like in a year it's going to be $4, and then it's going to go to $5. It's going to increase, and the reason why natural gas will increase is because the supply and demand. With these AI plants and data centers, and I don't think there's there's probably a small town around here that you haven't heard in Texas about somebody coming in and wanting to put a data center in. I know there was one in Red Oak, which is just south of Dallas, and they talked about one and said, hey, these data centers take up a lot of natural gas. They will take up a lot of natural gas in the future. They don't want to go on the electricity because that'll be on their grid. And you don't want all these data centers on grids because that'll raise the price of electricity all across the board. So they're going to be different, and they're going to have their own, I don't say grid, but it's kind of like they won't use the grid. They'll use natural gas. And that's why we feel like that natural gas will have a really great demand in the future for natural gas, which will drive that price up. So not only is oil going to go up or stay up, but we also feel like natural gas will also stay up because it's commodity driven, even though natural gas is United States supply and demand, where oil is a global, supply and demand. But it's going to be, it is the same principle, supply and demand. If there's a huge demand for something and a limited supply, the price is going to go up, which is exactly what's going to happen with natural gas prices in the next year, just like oil. Same thing with oil. Oil prices are going to continue to go up as long as we have the war going on.
A lot on the horizon for natural gas, I would say, and the potential that it has to be used within our country and for the rise of AI and technology. So we are definitely keeping an eye on that along with a lot of other people. But let's jump over there to Mark. Hey, Mark.
Hey, Rachel.
Let's talk a little bit, Mark. I want to talk, interesting how we are talking about natural gas and kind of the evolution of where it's headed. But, for you, I wanted to talk a little bit about the breakdown since you've worked in this industry for how long, Mark?
I guess 45 years.
45 years. That's incredible. So I wanted you to kind of go through with our listeners and watchers, whoever's viewing this today, over, 10 years of being in the industry, 15, 20 years. What are some of the different tools and technologies that you've seen change along the way to really evaluate acreage and what you're looking at?
Well, for the evaluation, probably the most revolutionary change is the evolution of 3D seismic. That was made possible because of the fact that computers, microprocessors are so much faster, more inexpensive, and so huge computing power is available, and we can handle a lot of data and actually image a 3D image of the subsurface, which is rather remarkable. But the thing has changed our industry, at least domestically, and even some in the international arena now, is the drilling of horizontal wells. Rachel, we used to drill through zones, we would call them gas shales. Oh yeah, well, we were drilling through the Bakken. We said, well, there's the gas shale. We know where we are now in the well. Or the Barnett, the Marcellus. Whenever we drilled through those, we'd get a big kick of gas on our mud logging detection units. These are things that we run to see what kind of hydrocarbons are in our mud system while we're drilling. And it was a way for me to verify where I was while I was drilling the well so that I could decide when we were going to be at the bottom of the well or at the objective depth. But what we didn't realize is that those things could actually be reservoirs, not just simply places where hydrocarbon was created. And now we know that they make fabulous reservoirs, and that's why the Permian Basin is what it is. It's the Bakken, the Barnett, the Marcellus. I mean, just go on and on and on. And there's all these plays of really what has really changed the U.S. fortune as far as our ability to have a domestic source that's even great enough that we can export. I heard something the other day that talking about how our trade deficit was better than it had been because we're starting to export a lot of oil. And that's rather interesting. I mean, that's not something we used to think of. We were always thinking of ourselves as net importers. So,
well, we're not exporting.
I think that the drilling technology, the 3D, those are the things that really have revolutionized the geologic world.
Yeah, I mean, tell me 40 years ago, I mean, what you guys were doing to assess lease acreage. I mean, were you just using the data points in the area where other wells had been drilled and the mud logs and going with that?
Well, we did. We had a lot of points of control, which interestingly enough, when we drill horizontal wells now, we don't get new points of control because we often don't log the vertical part of the well anymore. It just saves money. So we don't have any more vertical control in a lot of places. But we have a good grid of wells that were drilled back when we used to drill a lot of vertical wells and complete them. And a lot of people can't imagine how revolutionary it is, but we used to go out on a well and in the middle of the night, and we would know whether or not we had pay in the well. You know, we might have drilled a well and we were wondering whether we were going to have pay or it was going to be a dry hole. And I could tell you by looking at a log in a logging truck in the middle of the night. These days, I don't have that asset to use because the horizontal well, I have to complete it. So we stay in areas where we know we have good, dependable production. And that's, if you look at King's drilling philosophy, that's exactly what we're doing. We're staying in areas like the Bivins Ranch we talk about. That actually is a huge oil and gas field in the Canyon Lime. And we're just trying to figure out how can we get better results, not whether or not we're going to get results. That's a big change.
Yeah, no, that is a big change. I mean, just out of curiosity, Mark, in the beginning years of some of the projects you were on, how many times did you guys actually hit and say, oh, this is like a dry hole? We didn't really get much production.
Well, unfortunately, it depends. When I first started, like a lot of people, you go through a training process, and I started drilling a lot of development wells. And that was in the 80s, 1980. And everybody was predicting that oil was going to be $100 a barrel. Every economic run we did was positive. And the company, I was working at Conoco at the time, we were trying to replace our production. And so I got to drill a lot of wells in the first 2 years of my career, which was really fun. And I always tell everybody, I never drilled a dry hole, but I never drilled a very good well either. It wasn't until we started drilling wells that had a little more risk to them that we started, where sometimes I go out in the middle of the night and it was a real gut punch when I thought something was going to work and it didn't work. But then on the other side, when it did work and you looked at the log and you saw all that pay, it was pretty exciting too. It's a rewarding industry. But now we're drilling in areas where we know we have hydrocarbons, these horizontal wells. And so we don't have the same kind of risk profile we had when we were drilling exploratory wells even 10, 15 years ago.
Yeah, much different landscape for you guys, you know, at this point of what you're doing, especially in the Bivins Ranch area, which is pretty incredible to get to be able to observe and listen and watch you guys talk about what you're doing and listen to you, Mark. I love when I get to listen to you talk about the geology of Bivins Ranch. It's very fascinating. So thank you for that, Mark. I'm going to hop on over to Bill for a little bit and, you know, just talk, Bill, a little bit about, you know, when you look at an area like the Bivins Ranch that we are working in, what makes that acreage important from a land and business development standpoint?
Great, thank you, Rachel. There's quite a few things that lend itself to being beneficial for King, and also it gives those who invest with and participate right along with King in a project like the Bivins Ranch that you don't get very often to do otherwise. But the main thing, or there's a couple of main things for Bivins Ranch that are very attractive. One is because it is a blocky 60,000 acre, acreage footprint. It allows you to drill longer laterals. You can share pipelines, roads, tank batteries, power systems. And if you keep a rig busy, like we're hopefully getting ready to do here soon, it allows you to develop the property with fewer rig moves and more efficient pad drilling. That's a big thing on a large scale ranch like this, is you could drill multiple wells off of one pad. And when you had, say you carved up 60,000 acres by 160 acre tracts like you have, say in East Texas, 160 acres or smaller, you could easily have 500 pads to develop that. Here, you won't need that many because you can drill off of one pad in multiple directions, and it allows you just to be more efficient, from better well design to providing a long-term drilling inventory, more predictable results, hopefully, and it reduces a lot of problems you have when you have small tracts, because the Railroad Commission sets forth the field rules for those tracts, and a lot of times you may have to stay 330 feet from even an internal boundary, and on a lease like the Bivins, that's not a worry until you get to the edge of the lease. So it's very, very helpful, and there's just a lot of benefits to drilling on a lease that's this large. If you had the same amount of acreage and you had 160 acre leases to make up this 60,000 acres, that's almost 400 individual tracts, and you could literally have several thousand mineral owners. In the Bivins, we've got 3 potentially. The Bivins and another company, and so it just makes life from the land standpoint a lot easier. It also allows you to have one road connect many pads. You have to frack the wells. That requires a lot of water, and
Yes.
So you could have one large frack pond that would facilitate half a dozen or more drilling pads, and you could have, say we have 2 wells per pad, that's 20 wells. So it's the economics of a large lease like this
Right.
are very, very economically desirable and operationally efficient.
That's interesting. I always like to come around and ask kind of some basic questions about things that you guys mentioned. For anybody out there watching, part of the oil and gas rundown is to give people the basic information about our industry. Let's talk about the frack pond for a minute and the importance of water, Bill, when you're actually assessing an area, when you're drilling. When you assess an area that you want to drill on and it doesn't have water, do you guys create the frack pond? Or, just explain that to people, because we've all seen landman, well, not all, but some of us out there have seen landman, seen them swimming, in the pond and all of that. So how important is water, right? The use of it. But then what happens if there is no water out there?
Well, it's a real problem. If either Jay could address it, or if we had our drilling engineer on board, but I can tell you that water in the Permian Basin is a real issue. There are so many wells being drilled, and there's only so much water. And we have one frack pond that is supported 4 wells. We've got 2 water wells that we drilled that pump water into our frack pond, and it holds quite a bit of water. So sometimes, if you don't have enough water, that'll dictate not only when you drill the well, but when you frack it. More importantly, when you frack it, because that requires a lot more water than just to drill a well. And frack water in the Permian Basin is being recycled when they can. There are companies that help you come in and recycle and clean your water. You just can't keep using the same old water. If you were taking a bath, you'd want clean water. You wouldn't want to take baths in the same tub, 100 times. So it's a big deal out west, up in the Marcellus, up in Pennsylvania. Water's plentiful. It can be an issue up in North Dakota and the Bakken. I know being involved in the Eagle Ford and Chalk in South Texas, depending upon where you are, water can be a real issue. So it's a real concern that we addressed long before we spud the first well.
Yeah, so it's definitely one of those key components. I know we've talked about this before when you're assessing lease acreage, is also, can you actually get the hydrocarbons in and out? Is there infrastructure to move, things, the hydrocarbons in and out, or you need to build a road? So also, do you need water? Water is a main staple for finding a good location, which is very interesting. So Mark, Mark or Bill, I want to talk about, our Mid-Con area for just a little bit, because we've got a well drilled there. I know we're spudding 2 more, so we're very excited about what's happening in Mid-Con. What makes that area attractive for King? And anybody can answer that, Mark or Bill.
Well, as far as the geology is concerned, like at Bivins Ranch, the geology is predictable. We're not drilling wells out in the middle of an untested area. So we know that we're going to get effective hydrocarbon recovery. We look at the economics before we drill the wells so that we can predict the outcome. So that's the primary thing that draws us to that area, because we feel very confident that we'll hit a successful well when we drill one. And then the challenge, and this goes into land, which is Bill's part, and that is, how do we obtain enough land, building it a piece at a time, which is what we're doing in the Mid-Con, as opposed to Bivins, where we have 60,000 acres to work with. In the Mid-Con, we have to go out and lease and acquire that acreage. Bill, you want to talk about that?
Bill, you muted.
Sorry. Mid-Con's a great area because where we're drilling is a little easier to lease than, say, in the Delaware Basin, or even if you had to take leases around our Bivins Ranch. So even though you have more tracks, the type of wells we're drilling are potentially not as long a lateral, but as we begin to accumulate more acreage, and we have quite a bit already, our lateral length may increase. It may double in certain cases. And there's the midstream part is also a little easier because it's carved up into smaller tracts. Pipelines are more accessible. There are more pipelines there, and you only really need pipelines for gas. Oil you put in a tanker truck and drive it away. Same thing in the Bivins. You put the oil produced from the Bivins wells or on the Bivins lease, put it in a tanker truck, and it drives down the road. Whereas gas, you can't put that in a truck. So it's a little more challenging where we are in Potter and Oldham counties. But the Mid-Con is a great area to exploit. There's more people to deal with. You've got more. It's a big farming country, so you have to make sure that your surface location is not on top of a surface water distribution system. When you fly over that area, you look out the window on the plane and you see all these circles. Sometimes those circles have water spigots on a long pipe, and it goes all the way around. You have to make sure that you work with the farmer or rancher to make sure you avoid those. But it's a great place to be, and we're looking forward to drilling quite a few wells.
Absolutely. Yeah. And I think that's Jay, just bringing you back in here, I think that's what is so incredible right now about the assets that King has currently in our fund, is that it is very diversified. We've got non-op in the Permian. We've also got big acreage, rolling acreage, like you talked about, 60,000 acres, and giving as you guys laid out, the benefits of that, right? Working with one family, but those are bigger wells. They take a lot more to drill some of those wells. And then Mid-Con has a different acreage structure, but some of those wells can be drilled faster, a little bit smaller, but great value. So I love that we have that diversification within our portfolio in King right now. Jay, you there, or did you lose us?
No,
there he is.
I'm paying attention. I'm learning something.
Yeah, so just wrapping up, you see Jay's book right there, Upside Oil and Gas Investing. Like, you got yours there, Jay, got mine back there. Make sure, if you haven't read that book, that you shoot us an email, connect with us at kingoperating.com so that you can learn more, and we'd love to get you a copy of the book. It's also available on audiobook, and you can find it on Amazon as well. Find out more about what we do and how we use a unique model in the oil and gas industry to benefit investors. And I will remind you one more time about the webinar that we have tomorrow. You do not want to miss it. It is going to be highly insightful and full of information that you're going to want to know. So join us tomorrow. You can register online. See if Laura put where you want to register. If you want to register, shoot me an email, rgriffith@kingoperating.com. We'll make sure we get you the registration link. So thank you everybody for joining us today. Make sure you come back next week. We will be here, and have a fabulous week, gentlemen.
Great.
Thank you, Rachel.
Everybody.
Thank you, everyone.
Great job.
Bye-bye.
Thank you.